myself Vaibhav. In today's session of Market Movers, we are going to go in the formation of the Euro JPY, which has been consolidating for the major part of last week. And as the new week is beginning, we are looking at the possibility of the breakout happening in Euro JPY beyond the last week's range. So we will see if there are any opportunities in today's session to exploit on the trading side. If you consider the trading context for the day, the sentiments in the markets are on the risk on side. If we see the major equity indices for most of Asia and the Europe, the gains were robust, and particularly in the European trading session, we saw the gap up happening, and then those positive sentiments also prevailed in the most part of today's session. And now, as the US session is starting to get underway, we are seeing the major equity indices in European Union and also the UK are trading almost more than 2 percentage point up. The DAX is even trading more than 3 percentage point up, and these positive sentiments are also being reflected in the equity indices derivatives, the future segments of the market. And now the US has also opened with the lead on the higher side, and we have the key equity indices trading higher than 1 percentage point. And in today's session, we are also going to focus on the formation in the NASDAQ, which is showing the signs of reversal. If you consider the data docket for the day, there is not much of an incoming data during the North American trading session. Even earlier during the day, the Asian trading session hours and the European trading session hours, there were not many major releases. One of the release which is there after just a while is the Dallas Fed Manufacturing Index data, and here we are expecting some moderation to happen in this index reading, and the figure around 5 to 6 is being expected for the month of September compared to the prior month's reading of 8. Now let's shift our attention to the technical segment. Here we will first consider the currencies cross, and that's the Euro JPY, and then as I said, we will be going back to the equity segment of the market with the focus being on the NASDAQ. Let's start with the Euro JPY's technical outlook. This is the daily time frame chart, and here this consolidation which is happening closer to the 61.8% Fibonacci retracement of its rally, starting from below 120 to almost extending toward 127, I think is indicative of the fact that we might have seen this fall, the free fall in Euro JPY, and now it's the turn of consolidation with some retracement, which might even push the Euro JPY towards 124 levels in coming session. So we are looking at the possibility of exploiting this base which has been formed closer to the 122.5 level. And as the things stand, given the fact that the backdrop is also of the risk on sentiments, we can indeed bet on some weakness being persistent in the JPY, and the euro is likely to be the beneficiary in such scenario as well. So let's see how the things stand on the lower time frame chart. Here we have this consolidation shaping up closer to this second support of this month's pivot point series. So here we can see that the Euro JPY's price action has more or less respected this second support, and we saw this sharp turnaround in today's session after making low below 122.5, and now the Euro JPY is up more than 50 pips from those levels. But still we need the break on the higher side for further confirmation of the possible revival taking place in the Euro JPY. So here I think if we see that during the American trading session if the Euro JPY holds well and eventually goes on to cross above this immediate swing high, then we will have more reasons to believe in the turning the corner of Euro JPY, and eventually we can even think about from the medium term perspective. Right now, we are more concerned with the short term perspective, and there also things are looking promising for the long trade. So, we will see what are the opportunities emerging in today's session. If you consider the regression curve, it is of course still steeply bent on the lower side, but now the price action has entered in the upper band of this regression curve, and if we go on to see a fresh break above this upper band of the regression curve, then eventually during next couple of sessions we are likely to see the flattening of this regression curve. And as I said, we also have this second support of this month pivot point series, so that can also be utilized as a crucial marker for deciding whether to go long or whether to simply sit on the sidelines. If you consider the confluence of 50 and 100 SMA around 122.8, I think now that the Euro JPY has consolidated for such a long time, and we have seen it repetitively finding the buying momentum as and when it dropped toward these 122.5 levels. We have reasons to believe that eventually the Euro JPY is likely to cross above this 200 SMA, and then we will have the formation of higher highs. Of course, we will then need to wait for some further correction and consolidation. So we will have the formation of higher highs and higher low in place. But as the things stand, we can even think about going in for the fresh trading opportunities closer to the current prices of 123. But in that scenario also, the stop loss will be 50 pips away around 122.5. Or the second scenario is that we allow some more time to consolidation to Euro JPY for consolidation, and if we see that a new swing high has been formed, and then if there is some sort of correction in the Euro JPY, we can continue to look for the buying opportunity as long as it is able to hold above these 100 and 200 SMAs. So from there on, we can pretty much think about going above these 200 SMA, and that is going to open up the possibility of making more than 60 to 70 pips in the trade in Euro JPY while keeping the stop loss just little below this immediate swing low, and that will give us a risk reward of around 50 risk reward ratio of around 1 is to 2, with stop loss being around 50 pips, while you will be targeting almost close to 90 to 100 pips on the higher side. And if things go well, this indeed might good turn out to be a good choice given the fact that long extended consolidation has already taken place. Now let's shift our attention to the equity segment. Here we will first see the NASDAQ's technical outlook. This is the daily time frame chart, and here we have seen the NASDAQ correcting and then consolidating just little below these 11,000 levels. But now in today's session it is trading substantially higher, and we are looking at the possibility of turnaround happening in the NASDAQ. So here we are. This crossover is still bearish, but now the candle price has crossed above this 20 EMA, and that is also going to be one more factor while deciding whether to go long or not. So here, coming to the lower time frame chart of 4 hourly, we have the first support which was breached earlier, and then we saw bounce happening which also fizzled away. But now this time around the NASDAQ has managed to breach the crucial level and also hold above it. And as I see, if it is able to hold above these first support, the levels close to 11,200, then the NASDAQ will have, I think, clarity, and we can indeed think about the possible move towards this central pivot point, which is there around 11,700. That's almost 400 points away from the current level. So we are not in a hurry. We will see how things shape up, and we will of course need some correction from the current levels. As I don't think we will be getting ideal risk reward ratio right now, as we have seen big move in the Nasdaq, and because of that we might see some consolidation taking place in next couple of sessions, and then we will indeed have the opportunity to go in for a fresh trade. So here we are looking at this downward sloping trajectory of the Nasdaq's price action, and around the same area we also have the confluence zone of 50, 100 and 200 SMAs. So we here the price level around 11,000 is going to be crucial for us, and if we see some sort of correction happening in the Nasdaq, then I think we can continue to look for the long trades if the Nasdaq goes on to drop towards this 200 SMA line. But right now the possibility is pretty dim, as we have seen substantial move on the higher side. So if that does happen, we will have to stay ready and see how things evolve moving forward. But technically speaking, we have already seen double bottom kind of formation around 10,700, and now this is the sharp rally on the higher side. So if we can wait it out, and if things turn out as per our anticipation, we will be in a sweet spot while going for the trade with a possible target of around 300 to 400 points, while at the same time our stop loss will be fairly limited to around 200 to 250 points. So I can't really say that the risk reward is going to be exactly 1 is to 2, but we will have the risk reward ratio which will be pretty close to the 1 is to 2 that we usually use, and in due course of time it might prove well. So that's it from my side for today's session, and if any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.